Okay, good day everyone. So for today, I will be discussing the answers in exercise 1 and as well as the exercise 3 that was uploaded in your Moodle. So we have the first set of questions for exercise 1 includes the following instruction. So determine whether the underlined item or underlined term rather is a trade discount, a cash discount rate, a cash discount period, or a credit period. So we have number 1, the underlined item is 10. So this is under the slash, so that is 2 over 10. So this is a cash discount period. Then we have number 2, we have 10%. This is a trade discount. Okay. Next we have n over 10 EOM. So that means that you will be paying the account 10 days after the end of the month, and this is a credit period. Next we have 5 EOM, that's 3 over 5 EOM. This is a cash discount period. Next we have 5 in 5 over 10. So this is your cash discount rate. And then we have 3 and 3 over 5. So that is also a cash discount rate. Net 30 is a credit period. Then we have the 10 here. This is the second trade discount. Then we have for number 9, we have 3 in 3 over 5. So that's a cash discount rate. And then in number 10, we have 5 over EOM. And EOM here is a cash discount period. Next part is for each of the following, determine the last day of the discount period and the last day of the credit period. Okay, so we have the first one, last day of the discount period. So that's February 19 plus, okay, according to the instruction, if there are two discount periods, identify the one pertaining to the second discount period. So we will use here the 2 over 10. So 19 plus 10, so that's 29. But uh, there would be no 29 for February, considering that in the instruction, we will assume that it is not a leap year. So we will use the day after February uh, 29, which would be um, March 1. Okay? And then last day of credit period, we have 19 plus 30, that's 49. And then 49 minus 28 days in February, so you will get March 21. Alright? Okay, next is number 2. So we have, for number 2, we have 16. Okay, so we have 16. March 16, so that's 1 plus 15 days. So that would be March 16. Last day of credit period, 1 plus 30 days. So that's March 31. Next, April 16. Okay, 16 plus 10 days. So that would be April 26. Then we have 10 over EOM. That's 10 days after the end of the month. And the end of the month for April is 30. So the next month is May, so May 10. Next, we have May 2. May 2 plus, okay, so that would be 5 EOM. So that's 5 days after the end of the month. The end of the month is May. So the following month is June. So therefore, June 5. Next, we have May 2 plus 40 days. Okay, so you have 2 plus 40 minus 31 days in May, so that would be 11. So June 11. Again, May 2, 2 plus 40, that's 42, minus days in May, that is 31. And the remaining number of days is 11, so that's June 11. Okay, next we have June 26. 26 plus, we will use the second discount. So 26 plus 20, so that's 46 minus 30 days in June. So that would be 16. So July 16. Next, we have 30. 26 plus 30 minus 30 days in June. That's 26. So July 26. Okay, next, determine the invoice price, cash discount availed, and the amount paid. Okay, so we have instructions here how to answer the questions. Okay, so we have first item. So what would be the invoice price? So since there's no discount rate, trade discount here, there's no trade discount. So our list price would be the invoice price. Next, how much is the cash discount availed? So you need to check if the payment date is within the discount period. So if it is March 1, okay, if this is March 1, and the date it was purchased was 19, what would be the last date? So you have, if that is 19 plus 5, so that's 24. February 24 to get the 3% discount if paid within 5 days. But since it's not on February 24, then you cannot avail the 3% discount. Next, let's check 10. So 19 plus 10, that would be 29, but we only have 28 days for February. So therefore, March 1. So therefore, since the payment was on March 1, we can avail of the discount equivalent to 2% of what? 2% of the invoice price nga 10,000. So that is 200. So since the discount availed is 200, how much is left? So we will deduct the cash discount availed to get the amount paid. And the amount paid is 9,800. Next, we have 150,000 list price. We deduct the 10% trade discount. So to compute the invoice price, using the shortcut, so 150,000 times 90% or 0.9. So you will get 135,000. Or you can get the 10% of 150, which is 15,000, and deduct it from 150,000 to get your invoice price. Now let's check if there's a discount. It says that 15 days would be the discount period. So March 1 plus 15 days is March 16. Since the payment is March 17, there's no more discount. So therefore, you're going to pay the entire amount of 135,000, which is the invoice price. Next, okay, we have April 16. And then we have 345 as a list price. So we have two trade discounts here. To get the invoice price, we can use the shortcut. 345,000 times 0.8. Why is it 0.8? That's 100% minus 20%, the first trade discount. Again, 345 times 0.8 times 0.9, because that's 100% minus 10%. So you will get 248,400. Now, let's check if there's a discount. So we have 16 and then plus 10 days, so that's 26. It was paid on April 20, so therefore there is a discount. Discount is 4% off 248,400. So that would be 9,936. So deduct 9,936 from the invoice price. So the amount paid would be 238,464. Next, we have 633,500. There are two trade discounts. Okay, so 633,500 times 0.6 or 60% times 0.9 or 90%. So that would be 342,090 pesos. Okay, again, why do we multiply it by zero point 0.6? Because the trade discount is 40%. So deduct that from 100%, you will get 60% complement. Then, why is it 90%? Because the trade discount is 10%. So deduct from 100,000. So the remaining amount is 90%. So 633,500 times zero point 0.6 times zero point 0.9. So 342,090 pesos. Now, let's check if there's a discount. So May 2 plus. Okay, but this is 5 over EOM. So 5 days after the end of the month. The end of the month is May 31. So the discount period would end on June 5, but the payment was on June 8, so therefore no discount. So we're going to pay the entire amount of 342,090 pesos. Then last item, we have 856,000. So the trade discount is 30%. So 856 times 0.7 or 70% because we have here the trade discount is 30%. So 100% minus 30%. So that's 599,200. Is there a discount? So let's check. We have June 26 plus 10. So that would be 26 plus 10 is 36 minus 30 days in June. That's 6. So that would be, okay, July 6. So July 6. So therefore, if the payment was made on July 5, there is a discount. Okay. How much would be the discount? Let's check again. 26 plus 10 days. So that's 36 minus 30. So that's 6. Okay. And then we have 5%. Okay, 5% of the invoice price. The 5% of 599,200. That's 29,960. Okay, so again, discount will be based on the invoice price. So that's 5%. Why is it 5%, ma'am? Because the payment was made on July 5 and it's within the discount period of 10 days. So how much would be paid? So 599,200 minus 29,960, you will get 569,240. Now let's proceed to the next exercise. This is with regards to the journal entries for the periodic and perpetual system. Okay, so the problem states the company sells with the terms 5 over 10 and 30 and had these transactions for the month. Discounts are allowed on partial payment. Okay, so this is with regards to the payments made by the customers. Remember that we are recording on behalf of this company, and transactions entered into by the customers, they record that in their respective books, but here we are recording in behalf of this company. So all of the transactions stated here are transactions made by the company. Okay, October 1, sold 10,000 of merchandise for cash. The cost is 7,500. If it's a periodic inventory system, remember that we are using accounts such as purchases, purchase returns, purchase discounts, and freight in contrast with the perpetual inventory system, that instead of recording purchases, purchase returns, purchase discounts, freight in, we use the account inventory. So first we have to record the sales for cash, so debit cash and then credit sales, we will use 10,000 because this is the amount of sales. The cost of sales is recorded if it is perpetual inventory system. October 2, bought merchandise on account. That's 20,000 pesos. That's 2 over 5 and 30. So the entry would be purchases and then credit accounts payable because this is on account. Next, returned defective merchandise to our supplier. Okay? So where does this relate? What transaction does this relate? So this is with regards to our purchase. The previous purchase was on account. Therefore, our entry would be debit accounts payable and then we credit purchase returns. In effect, the 2,300 will be deducted from the 20,000 credit. Why do we deduct? Because they have different balance. The previous transaction was recorded with a credit to accounts payable, and later on October 4, there was a debit to accounts payable. So if the balances differ, there would be a deduction in the account. We record purchase returns if there are returns made by us as the buyer. Okay? But if it is our customers who return the goods, then that is not purchase returns. It would be sales returns. Again, since we are the ones returning to our supplier and we are the buyer in this perspective, then therefore we record purchase returns. October 5, sold 32,000 worth of merchandise on account. The cost of sales is 29,000. So this is on account, so debit accounts receivable and then credit sales. That's 32,000. Again, the cost of sales will be recorded if it is a perpetual inventory system. Next, we have customer return 2,000 of merchandise related to October 5, and the cost of that merchandise is 1,560. Let's go to October 5 again. This was a sales on account. So therefore, we are going to credit accounts receivable. Why is it accounts receivable? Because previously, we did not receive any cash, but we debited accounts receivable. So it is appropriate that we also close this account, but not totally close because that would the amount that we're going to apply here is only 2,000, which is the amount of the merchandise returned by our customer. And then we debit sales returns. Why do we use the sales return, ma'am, instead of purchase returns? Again, since we are the ones selling in this transaction and it is our customer who returned the goods, so we're going to record the return as a sales return. Next, pay the amount owed on the October 2 transaction. So let's go to the October 2 transaction. That's 20,000 bought merchandise on account. But remember that we have returned amounting to 2,300 of goods to our supplier. So we're no longer paying the entire amount of 20,000, but only what is left after we return 2,300 worth of goods. So 20,000 minus 2,300, that would be 17,700. So debit accounts payable because we're going to pay our account, and credit cash because we're going to release money. So that would be 17,700. Next, collected half of the account of October 5. Let's go back to October 5. We have sales of 32,000. But remember, in October 8, our customer, returned goods worth 2,000. So therefore, our receivable is no longer 32,000, but 32,000 minus 2,000. So that would be 30,000. So how much would be accounts receivable left? That would only be 15,000, half of 30,000. 15,000. Why is it half, ma'am? Because according to the transaction, collected half of the account. Then debit cash and debit sales discount. Why is it there is a debit to sales discount, ma'am? Because according to the original transaction here above, that discounts would be allowed on partial payment. Okay, discount will be allowed on partial payment. So therefore, even if half of the account was collected, since the entity will allow for discounts, then we will give discount. But how much will be the extent of our discount? Only for the amount of 15,000. So go back to the main transaction. You have 5 over 10. Okay, so 5 over 10. So that means 5% discount if paid within 10 days. And let us check again if this transaction, if this payment qualifies for the 5% discount. So October 5 plus 10 days, that would be October 15. And when did they pay? The customer paid. So that is October 10. So therefore, there is a discount. Next question. Ma'am, why is it that we debit a sales discount and not a purchase discount? So we debit a sales discount because we are the seller in this transaction. If we are the buyer in this transaction and we availed of the discount, we will record a purchase discount. But instead of debit, that will be credited. Okay? If it is on the side of the buyer, or if we are the buyer, we credit a purchase discount if we're able to avail of a discount. But since in this problem, we are the seller here, so therefore, we record a sales discount. And remember, the debits and the credits here should balance. So if we allow a 750 sales discount, how much are we expecting to collect from the customer? So we will deduct the 750 from the 15,000. So that would be 14,250 only. October 16, collected in full the remaining balance of the October 5 transaction. Remember, the original transaction is 32,000 debit, and then there's a deduction of 2,000, so that's 30,000, and then deduct the partial payment of 15,000. But remember that the payment was only 14,250, but the credit to accounts receivable was 15,000. So the remaining amount, that's 32 minus 2 minus 15, that would be 15,000. But since the payment was made on October 16, and remember that the discount period is 10 days, October 5 plus 10 is October 15, therefore, the collection made on October 16 will no longer have a discount. Okay, so therefore the customer will pay us in full 15,000 without the discount. Now let's go to the perpetual inventory system. So the difference between the perpetual and the periodic inventory system is that the perpetual system will record the purchases, purchase returns, purchase discounts, and freight in using the account title inventory or merchandise inventory. Aside from that, we record cost of sales every time that we sell merchandise, and we credit the cost of sales every time there is a sales return. So in addition to the usual entries for periodic system, okay, we also add cost of sales entries. Going back, you have October 1, sold 10,000 merchandise for cash. The cost of sales is 7,500. So debit cash and credit sales, and then add additional entry for the cost of sales. So this would be the debit and this would be the credit for the cost of sales. This means that we need to recognize the cost of the merchandise we have sold. Pila man jud tong gasto sa palit na to or pag-acquire na to sa inventory para mabaligya. So that's 7,500. 500. And credit inventory 7,500. This means that we credit the inventory makuan, or the inventory will be reduced by 7,500. On October 2, we bought merchandise on account. Remember that instead of purchases, we will use inventory and then credit accounts payable because this is on account. Next, return defective merchandise to the supplier. So, debit accounts payable and credit inventory. Why is it inventory, ma'am? Because we're using perpetual inventory system. If this was a periodic inventory system, this would be a purchase returns. But since we're using perpetual, we use the account inventory. Sold 32,000 worth of merchandise on account. So whether it's on account or for cash, we need to record additional entry for the cost of sales. So cost of sales, credit inventory, and we will use the cost. Next, customer returned 2,000 of the merchandise on October 5. So sales returns, again, since we are the seller here, it's a sales return, and credit accounts receivable. And again, if there is a return by our customers, not our returns, but the return of our customers, we need to record additional entry to reverse the cost of sales by the amount of the cost of the merchandise returned by the customer. So, debit inventory. We debit inventory because the value received from our customer is the inventory, and we credit cost of sales to reduce the cost of sales because the sales was not pursued, or wala na siya na continue. It was not fully completed in terms of the 1,560 cost of goods. So wala siya gidayon. And wala gidayon because it was returned. Okay? So therefore, ang ato ang cost, the cost of the sales of goods would be reduced by 1,560. Next, pay the amount owed on October 2. The same entry with the previous one and the same explanation. The 20,000 will be reduced by the return of 2,300. Okay? Remember, we do not record this entry if we are the buyer in the transaction. We only prepare this entry, inventory, credit, cost of sales, if we are the seller. Okay? Next, we have October 10, collected half of the October 5 transaction. Okay? So again, we have cash, debit sales discounts, and credit accounts receivable. The same explanation, that is 15,000 because the original amount is 32,000, and then we reduce it by the returns of 2,000, not the 1,560, because we're going to trace the accounts receivable here. Accounts receivable 30,000, credit accounts receivable 2,000, so that's a reduction. That would be 30,000 left. And then, okay, so that is half, so that's 15,000. Next is, since in the instruction they allow discount even on partial payment, so the 5% discount is based on 15,000. So that's 750, and the remaining amount would be your collection of cash. Again, we record this as a sales discount because we are recording here as a seller. October 16, we collected in full the remaining balance, but since October 16 is beyond the discount period, so there's no longer sales discount in our entry. So simply debit cash and credit accounts receivable, which is the remaining amount. That's 32,000 minus 2,000 returns, minus 15,000 here, and so the remaining amount is 15,000, and debit cash 15,000.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.